Hello guys, welcome back to another Lumby trading video. In this one we're going to be doing some in-depth stock analysis on Etsy. Reason for this is firstly it was down, you can see around 6.5% for Friday's close, and it is also kind of coming into where we expect the overall reversal to now be on Etsy. We kind of see it coming into the bottom, its bottom, and we'd expect to see at least kind of a decent bounce coming off this level. But as always, we'll get straight into the analysis, and for this we start on a clean daily chart so we can see where are the gaps. We use gaps as price targets, not so much as buy entries. And when we're looking at gaps, we like the very obvious ones. For example, this 210 level, you can see quite an obvious gap. Again, another one at 258. And really they're the only ones that I can see very clearly. You may see some smaller gaps within these areas, but unless they're very obvious, we don't like to use them. Reason for that is you don't tend to get as big as reaction, and as we're using them as price targets, we want reactions because we're trying to sell before it sells off. So unless they're very obvious, we don't need it. Now, why do I say I expect this to kind of be the bottom of Etsy? Now, if you're looking at the 4 hour, you're looking at the daily, and you've got the standard deviation channels on, you can see at 140 on the 4 hour is the third deviation, and 136 on the daily is the third deviation. You don't expect stocks to ever kind of really trade outside of these third deviations. We are seeing it a tiny bit more common now just because the overall market's selling off. But either way, if a stock's at or below its third deviation, you kind of know if you're buying here, 9 times out of 10, you're going to make money. So it's really the main thing we're looking at. Any stock, we're seeing it on a lot of stocks now. You've just seen it on Netflix. You're seeing it on Starbucks. You're seeing all these stocks kind of push down to these third deviations, making them really good deals to be able to kind of trade for either day trades, swing trades, and kind of even investments, So really, however you're looking to trade or invest, these levels are really kind of where we're looking at. Third deviations is always kind of a great time to be trading them. So yeah, that's one thing we're starting to see. Etsy is kind of at 150 now. We want it to push down kind of that $10–15 more, and then that will kind of be where we expect the overall reversal to be in the bottom of Etsy's downturn, at least for the time being. What's also nice and we're starting to see is on the 4 hour at least, we're starting to see a divergence. So all a divergence is, if you don't already know, is just where price, well in this case, price is making lower lows while its momentum, so the RSI, is making higher lows. And why does that basically mean we're more likely to get a reversal? Because it's showing us that the selling pressure is getting weaker and weaker as it's continuing down, and when it finally gets so weak, all that's going to be left is more buying pressure, and when there's buying pressure, obviously the price will go up. So that's really what we're seeing now, and it's always a great thing to see because it just makes the trade that bit more probable to win. And you'll see what I mean here. If we go and check price, you can see obviously price is very obviously going down, but the momentum for it to go down is getting weaker and weaker. So as it comes into that third deviation, it should most likely be bouncing right away. But the only thing to take into account is on the daily, we aren't yet really seeing a divergence, or we're not seeing a divergence, should I say. So that can be one thing as the overall market selling off. If you want a bit more or high probability trades in these times, you could wait for some sort of a confirmation on the daily as well. And the 4 hour should be good enough. We're at third deviation, we're having divergence on one of our charts. But if you want kind of the absolute A quality setup, the best you can have, then the only other thing we would be waiting for is a divergence on the daily. So that is one thing you can wait for if that's important to you. But either way, 140 to 136 is kind of where we see Etsy falling down to. We expect that to be the bottom, and it's where our low risk bounce or kind of long areas are. Then where are our price targets? 165 and 165 and 173. They're going to be our first set of targets. You don't really have to lock in profits here. It's going to depend on your strategy. If you're more day trading, then these are the kind of targets you'll be looking at. If you're swing trading, these are areas where you may lock in a tiny bit of profit, but they're more areas where we most likely just move our stops. And if you're investing, you're probably just going to ignore that level all in, unless you're going to be buying more shares kind of at that level. Then our next set of profit targets will be 193 and 205. Again, now if you're day trading, it's going to be harder because it's very unlikely for us to kind of push that 140 to kind of $200 in a day. But either way, if you're trading intraday, on that day you kind of know these are levels where we most likely expect some sort of a pullback. So that's one way you can trade them. Again, if you're swing trading, most likely be locking in some profits here, and again moving our stops. And if you're investing, you could kind of start looking in some sort of profit here if you wanted to, but again, it kind of depends on your investment prospects. Obviously, if you're looking for 5-10 years down the line, then you're not really going to care. If you're looking for kind of, you know, a year investments, then that is kind of a level we would start being interested in. Now, where is our final target? And that's going to be around 220. Why is this our final target? Statistical mean. We always try and trade back to statistical mean, and we go to whichever one's closer. And we can see on the daily chart that is our closest of the two statistical mean, because on the 4 hour it is around 240, on the daily it's at 220. So that's going to be our final profit target. If you're day or swing trading, this is kind of where we're going to be out of the stock complete. We don't really want to be holding past here. Obviously, if you're investing, it's still a good area to be locking in profits, but if overall you're looking for the stock to go much higher, then obviously if you're investing, you don't care so much about the movements more intraday. So we're going to see kind of what kind of now upside this provides. So if we go to around 138, because that should be our kind of average cost between 136 and 140, to our final target, that provides 60% return on investment. Obviously that's very great, but if you've got that kind of upside, you're also going to be taking on some sort of risk, because it's showing you that the stock's more volatile. So always take that into account when you see a stock have a massive ROI. Most likely it's going to have a lot more risk than something, let's say if you're trading Goldman Sachs or JP Morgan, where you're probably not going to get your 60% return on investment. You're probably going to get something like 10-20%, but you also then don't expect it to fall a massive amount. For example, it would be quite unlikely to see, but it's a lot more probable than something like JP Morgan to drop down to say $100, so that's a 30% downside. So again, just take that into account, that you do have added risk on any of these stocks which are a lot more volatile. But really that is kind of the overall breakdown on Etsy. We think the overall reversal will kind of have a bottom of 136, and we have a key final target of 220. So I hope you enjoyed the breakdown on Etsy. Hope to see you in the next one, and that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay.